Good day to all. Dear friends, representatives of the press, colleagues from the National Bank of Serbia, and then all others who keep up with our work, welcome to the presentation of the August inflation report, which is a bit more specific this year because it coincides with the 6th anniversary of my term of office as the governor of the National Bank of Serbia. So this time the inflation report will be presented in a specific way. First, I will speak about the results in the previous 6 years, and then Ana Ivković will present our report, inflation report, which I must say this time is better than before and indeed represents well-performed, well-done publication that can be used by many for different purposes of predictions, writing papers and books, and projecting future. Then we will all be here to reply to any questions you may have. You are aware that in the past 6 years, our economy has transformed into a stable and promising economy, an economy with low and predictable inflation, balanced fiscal account, reduced external imbalances, a downward trajectory of public and external debt, growing investment, and recovered labor market. Today, we live in a country with a significantly lower risk premium, an upgraded credit rating, and a better position on the international competitiveness lists. Progress is also reflected in lower interest rates and, by all means, in the preserved value of the dinar and opened possibilities for raising our income, all of which boosts investments, exports, and production. In such an ambience, Serbia's gross domestic product has been on the rise for 11 quarters in a row, and according to our latest projections, this year its growth rate is going to measure 4%. This is by 0.5 percentage points more than what was envisaged by our May projection, owing to a faster than projected growth in construction and agriculture on the production side, and a faster pickup in investment on the expenditure side. We expect such movements to continue in the period ahead, given that favorable conditions at home support growth in investment and exports, and, by extension, higher employment and living standard of citizens. Most importantly, the results achieved are long-term and lasting. For our most important result is the low inflation, which has become a new normalcy in Serbia, which means we have been successful in the pursuit of our main legal objective. Not so long ago, in the autumn of 2012, year-on-year inflation measured 12.9%. In less than 1 year, we brought it down to 2.2%. And in the next 5 years, preserved it at an average of 2%. Since that time, inflation in Serbia hovered at a level recorded in European countries, equaling 2.4% in July. The intention to maintain, in the periods to come, what has been achieved is also affirmed by our decision to lower the inflation target from 4.-1.5% to 3 plus-minus 1.5% as of the beginning of 2017. Low inflationary pressures reflected primarily adequate monetary policy measures that were fully coordinated with fiscal policy, and this was also at the core of anchoring inflation expectations. Today, the financial and corporate sectors expect inflation to be maintained at a low level, as they have done for almost 5 years, since this brings certainty to their business and planning. Relative stability of the dinar exchange rate has been preserved, and the country's foreign exchange reserves have increased over the past 6 years. The dinar gained 0.5% against the euro. It should be noted that relative stability has been preserved despite strong turbulences in the international environment, such as Brexit, Fed's monetary policy normalization, trade and geopolitical tensions, crisis in some EU countries, Asian stock market meltdown in early 2016, etc. We have carefully assessed the intensity and type of pressures in the foreign exchange market and intervened impartially in both directions. Improvement in domestic macroeconomic indicators and the strengthening of the resilience of the domestic economy to shocks from the international environment shifted the focus toward purchase-side interventions, especially during the last 2 years. As a result, the country's foreign exchange reserves gained 1.1 billion euros on this account and now serve as a guarantee of future stability. Serbia's net foreign exchange reserves reached the highest level since 2000 at end July 2018, which is 9.5 billion euros, meaning that they have gained 4 billion euros from end July 2012. To buttress stability, we also increased the quantity of gold in foreign exchange reserves to 19.9 tons, which is 5.1 tons more than at end July 2012. Based on the analysis of inflation factors and risks in the domestic and international environment, in May 2013, we embarked on a cycle of monetary policy easing. Since then, the key policy rate has been reduced by 8.75 percentage points to 3%, which is its lowest level, significantly lowest level in the inflation targeting regime. And an additional monetary incentive to the economy also came from the gradual lowering of foreign exchange required reserve rates, which generated around 1 billion euros support to credit growth in 2015 and early 2016. Monetary policy accommodation fully translated into reduced costs of borrowing of corporates, households, and the government. Since May 2013, interest rates on new and existing dinar household loans have been halved, and those in the corporate segment turned even 3 times lower, which gave an impetus to disposable income, investment, and economic activity. Today, interest rates on dinar government securities are by around 7 percentage points lower, depending on maturity, than in May 2013, when we embarked on monetary policy easing. The dinar yield curve was extended to 10 years, with the interest rate of 4.8%, while in October 2014, when the 10-year dinar security was issued for the first time, it measured 13%. Today, this maturity accounts for around 15% of the total portfolio of dinar government securities. Apart from the decline in the risk premium and financing needs of the country, monetary policy easing also contributed to a sizable reduction in interest expenses and thereby to a better fiscal result. The public debt to GDP ratio declined to below 60%, and the dinar share of public debt rose to 25%. All 3 rating agencies monitoring our development increased Serbia's credit rating in 2017, assessing that the National Bank of Serbia was successful in preserving price stability and thereby rightfully earned higher credibility. The country's risk premium dropped significantly in 2017, with the EMBI for Serbia moving below 100 basis points by the end of the year, only to drop to 85 basis points early this year. Serbia's risk premium is today considerably below the global and European average, and by almost 300 basis points lower than at the end 2012. In conditions of accelerated lending, strongly supported by monetary policy measures, growth in corporate investment lending is seen as another positive development. The approval of investment loans has stepped up since 2015 and represented one of the important sources of financing in the new investment cycle, thus contributing to faster economic growth. Their importance is best illustrated by the fact that in the last 3 years, new investment loans almost equaled the inflow of foreign direct investment. Another important result we have achieved is a considerable reduction in inherited non-performing loans. Within 3 years only, the level of NPLs was slashed by more than 60%, and their share in total loans by 14.6 percentage points, from 22.4% in July 2015 to 7.8% in June 2018. I've already said that at end July, this data is lower by an entire 1 percentage point and is at around 7%, but when the official data is announced, we can use it in charts and tables and other reports of this kind. The structure of the NPL reduction was also favorable because the greatest decreases were recorded in sectors which were most severely hit by the crisis, such as construction, manufacturing, and trade. Profitability. By reducing interest expenses and exchange rate losses, we significantly contributed to profitability of the corporate sector. Allow me to elaborate on the reasons for praising the National Bank of Serbia and for some opposition of some others by using the figures that will follow. Profitability of the Serbian corporate sector increased significantly in the last 3 years thanks to its higher competitiveness and also owing to the reduction of interest expenses and exchange rate losses. In 2017, corporate interest expenses were 37% lower than in 2014, or down by 54 billion dinars, in the face of the rising stock of corporate loans. Thanks to the relative stability of the exchange rate, corporate exchange rate losses went down by 60%, or by 148 billion dinars. The end result is higher profit, which corporates used in the right manner to increase investment and expand their business. Positive effects of macroeconomic stability are also evidenced by the increasing exports of our products and services in the international market, which feeds back positively to the foreign exchange market and stabilizes its movements and, by extension, inflation movements as well. Since 2016, we have exported more than half of our production, and in the second quarter this year, goods and services exports reached 54.4% of gross domestic product. And for the sake of comparison, in 2012, this share measured 36.2%. The effects of macroeconomic stability also lie at the core of investment growth, which additionally accelerated from the start of 2018, and judging by all indicators, investment share in gross domestic product is likely to exceed 22% in the year as a whole. Let me reiterate, the share of investment in GDP in this year will exceed 22.2%, which was one of our objectives, and which is also another evidence of the long-term sustainability of the policy that we conduct. Apart from increased profitability of corporates and previously mentioned investment loans, a step up in private investment growth in recent years was also spurred by foreign direct investment. All of this confirms that we are an economy that now attracts an increasing number of non-resident investors with a long-term focus. The rise in foreign direct investment has continued, and this year we expect to see a net inflow of around 2.6 billion euros. Thanks above all to sizable investment growth, we revised our gross domestic product growth projection for this year from 3.5% to around 4%. That Serbia's economic growth stands out is also confirmed by the assessment of the European Commission, which sees Serbia as the greatest contributor to the Western Balkan economic growth in 2018. Progress in the real sector spills over to the labor market as well, with private sector employment posting a constant rise and the number of the unemployed plunging to its 20-year low. Ladies and gentlemen, let me conclude that these are only some of the key results we have achieved since 2012 to date. However, it would be immodest to say that we are the only ones to be credited for these results. There are many of those who aren't in the spotlight and cannot be seen, but they will have an opportunity to sit at this table with us and to be in positions that will show them that these persons are the pillar of the National Bank of Serbia. And this is the teamwork that I'm particularly proud of, because I invest in staff that can help us sustain our stability in the long run. These measures yield full effects only in coordination with other government policies, and this has been achieved in Serbia. I believe that in the last 6 years we got to know each other very well to respond to all the challenges ahead of us. We, as the National Bank of Serbia and the people I work with, you had an opportunity to get to know us, and you will continue to do so. So I'm certain that we have earned the confidence of all of those who may or may not like us, but the figures in the report we have provided today and which are available on our website at all times speak undisputably about the results of what work. That we are not constrained by inertia and previous practices, I hope will be evidenced on 22nd of October, when the instant payment system will be put into operation, even before the European Central Bank. And this is one of the most advanced payment systems currently available in the world. Thank you for your attention. You will have my speech, printouts of my speech, as well as of Anna's after the presentation, so that there are no confusions, no mistakes or misunderstandings. We stand behind everything we say, as well as behind everything that we do.
Thank you, Governor. At the very beginning, I would like to use this opportunity on behalf of the team sitting at this table and on behalf of the colleagues sitting in this room and others who have worked industriously on this report. I would like to wish a successful new term of office to our governor. You have heard that the results we have achieved are very significant and they're quite measurable. Let us now give a brief overview of current macroeconomic developments, our new projections and monetary policy decisions. We would first like to reiterate that GDP growth of 4.5% year-on-year in the first half of the year has surpassed our expectations stated in May. This means that the positive risks we emphasized in May now materialized, leading us to raise the GDP growth projection for this year, like the governor said, from 3.5% to 4%. The upward revision was a result of higher than forecast construction and agricultural growth on the production side and faster investment growth on the expenditure side. We expect that fixed investment growth will remain high in the remainder of the year, and it seems that its share in GDP will exceed 22%. After reaching this year's low in April, inflation stabilized from May at somewhat about 2%, which is in line with our expectations. The new projection also indicates that inflation will remain low and stable and continue to move within the target band in the next 2 years. And you know that the target band equals 3 plus minus 1.5%, and you can see the projection in the left chart. Positive fiscal trends also continued in the period since the previous inflation report. In the span of 5 months of 2018, consolidated budget recorded a surplus of 9.3 billion, suggesting that this year again fiscal result will be better than planned by the fiscal strategy. We also favorably assessed the considerable increase in government capital expenditure, which served as one of the drivers of investment and economic growth in the first half of the year. The share of public debt in GDP, which has moved below 60% since the start of the year, is yet another important indicator of the country's improving fiscal position. In the first half of the year, manufacturing exports continued their strong growth of 10.7% year-on-year, with a positive contribution from all of its sectors. And we're talking about 23 export sectors. Imports grew in parallel, mainly of equipment and intermediate goods, owing to increased business and investment needs of the economy, and in part to higher global oil prices. Imports of consumer goods were also on the rise, in line with growing household consumption. However, imports of consumer goods grew at a slower pace than imports of equipment and intermediate goods. On the other hand, due to more favorable developments in trade, in services and in the primary and secondary income accounts, in the first half of 2018, the current account deficit declined by 0.7 percentage points year-on-year to 5.4% of GDP. Turning to international level, global economic growth outlook remains favorable, though trade tensions between leading global economies give rise to risks that growth could be slower than expected. Growth in the euro area, our key trade partner, was dampened in the first half of the year, leading the European Central Bank to revise down the euro area growth projection for 2018 from 2.4% to 2.1%, while keeping the 2019 and 2020 projections unchanged. Still, what is important is, and what we want to communicate to you, is that economic growth of the euro area in the medium run will remain stable and broadly distributed, both sector-wise and geographically. From the aspect of monetary policy, uncertainty in the international environment arises from volatile movements of global primary commodity prices. This mainly relates to oil prices, which have been on an upward path in the past year, reaching even $79 per barrel on some days. Oil prices were on average 11.2% higher in the second than in the first quarter, as a result of geopolitical tensions and other supply-side factors. However, despite this, early August oil futures that we used in the projections suggest that oil prices will measure $74 per barrel by the end of the year and fall to $71 and $68 per barrel in the next 2 years. If we compare the May and August projections, we will see that these are somewhat higher levels than suggested by futures 3 months ago. What we also monitor are the prices of primary agricultural commodities. They're particularly important given their volatility in recent months. Still, bearing in mind the movement of futures, we lowered the assumption of their growth for this year compared to the previous projection, while we revised upward the next year's projection. The mentioned rise in oil prices in the global market was one of the key reasons for somewhat higher inflation in the international environment in the past several months, and thus for higher inflation projections in most countries for this year. The European Central Bank raised its euro area inflation projection for 2018 and 2019, but did not change it for 2020, so inflation is expected to measure 1.7% during the entire projection horizon, which means next 3 years. With inflation gradually approaching the 2% target, the European Central Bank will most probably conclude the asset purchase program late this year. However, as its officials announced, it will continue reinvesting principal payments from maturing securities for some time thereafter, and will keep its key interest rates unchanged at least through the summer of 2019. On that basis, we estimate that the conditions in the international financial market remain favorable for emerging economies, Serbia included. Also, thanks to narrowed internal and external imbalances that the governor mentioned, Serbia is now more resilient to changes in the international environment. This is also indicated by the risk premium, which was slightly lower at end July than at end March, while for other emerging economies at the global and European level, it gained 28 and 36 basis points, respectively. So the risk premium of these countries increased in this period. Investors' perception of Serbia is favorable, as also shown by the achieved capital inflow in the first half of this year, which equaled 1.8 billion euros, mostly made up of foreign direct investment, which equaled 1.3 billion euros. Foreign direct investment gained 8.6% from the same period last year and more than fully covered the current account deficit, which contributed to continued appreciation pressures in the foreign exchange market. To ease excessive short-term volatility of the exchange rate, since the start of the year, the National Bank of Serbia has intervened in the foreign exchange market by purchasing 1.48 billion euros net, while the dinar strengthened by 0.4% against the euro in that period. The expected net foreign direct investment inflow for the year as a whole of around 2.6 billion euros will ensure full coverage of the current account deficit. And we expect this trend also in the coming period, which means that this will be one of the factors of external sustainability in the medium run. Lending continued to grow at a solid pace, and past monetary policy easing drove down interest rates on dinar loans to new lows in the second quarter. Low interest rates, along with economic growth, labour market recovery, increased interbank competition, a relatively low country risk premium and low euro area interest rates, have a synergy effect on stepped-up lending. In June, total year-on-year growth in loans reached 7.6%, whereas excluding the exchange of the effect of write-offs of non-performing loans, it equaled 14.1%. If we exclude the effects of write-offs and of assignment, then it is even more dramatic. The share of non-performing loans in total loans has fallen dramatically to 7.8% in June, and this is the lowest level since 2008, when this indicator of bank asset quality was introduced. In the second quarter, robust GDP growth diversified across sectors continued. According to the preliminary estimate of the Statistical Office, second quarter growth equaled 4.4% year-on-year, and I repeat, this is above our expectations stated in May. The highest contribution to growth continued to come from service sectors, which were positively affected by the recovery of domestic demand and construction, mainly owing to faster implementation of infrastructure projects and a gradual recovery of the real estate market. Industry and agriculture were also positive contributors. Thus, growth in the first half of the year reached 4.5% year-on-year and was the highest in the last 10 years. Based on developments in the first half of the year, we revised the GDP growth forecast for 2018 to around 4%, or 0.5 percentage points higher than in the May projection. The upward revision was a result of faster than expected construction and agricultural growth on the production side and faster investment growth on the expenditure side, which we mentioned as positive risks in the May projection. And these positive risks materialized. We did not change the GDP growth forecast for 2019. It remains at 3.5%, in part due to the high base on account of faster growth this year. We estimate that this and next year's economic growth will be driven by domestic demand, that is, by investment and household consumption. A basis for further growth in private investment is favorable macroeconomic environment and growth outlook, supported also by favorable financial conditions. Turning to inflation movements, according to our estimates, inflationary pressures on account of the majority of factors remain low. Consistent with the expectations stated in May, after reaching this year's lowest point in April, year-on-year inflation has moved within the target tolerance band and measured 2.4% in July. Looking at components, prices of fresh vegetables recorded somewhat elevated growth, as did the prices of petroleum products due to a continued increase in global oil prices. On the other hand, a quarter of the prices in the consumer basket increased in the targeted band of 1.5 to 4.5% and a half by less than 1.5%, confirming that inflationary pressures remain low. If we were to exclude volatile categories from the consumer basket, we would get core inflation, which has moved in the range of 0.8% to 0.9% year-on-year since March. This measure of inflation also indicates that inflationary pressures are low, just as inflation expectations. Inflation expectations of the financial and corporate sectors are anchored around the 3% target. Under our central projection, year-on-year inflation will continue to move within the target tolerance band in the next 2 years, below the target midpoint by late 2019, though it will temporarily approach it in the first months of next year, owing to the low base effect from the start of this year. In the short, as regards monetary policy decisions, having cut the key policy rate by a total of 50 basis points in March and April to 3%, the Executive Board has kept it unchanged. The Executive Board made decisions in consideration of the projected movement of inflation and its underlying factors and the expected effects of past key policy rate cuts. Caution was also mandated by the uncertainty in the international financial market and the market of primary commodities, particularly crude oil and primary agricultural commodities. Ladies and gentlemen, esteemed members of the press, dear colleagues, the August inflation report contains 4 text boxes concerning current topics. The first one provides an overview of the key measures and results of the National Bank of Serbia in the past 6 years, that is, during the governor's first term. In the second text box, we analyze the impact of foreign direct investment on production, exports and employment in manufacturing. Let us present some of the key figures from that text box, because we think they're very important. In the past 6 years, in the manufacturing industry attracted 3.8 billion euros, which is around 36% of total FDI inflow in that period. In the same period, production manufacturing increased significantly by over 22%, and so did employment by over 9%, which is equivalent to around 40,000 persons. With this, the productivity of manufacturing industry increased by around 12%, and now we may talk about a sound growth of productivity in this in manufacturing industry. What we have been highlighting for quite some time is the growth in exports of manufacturing industry. Last year, relative to 2012, manufacturing exports were by around 6 billion euros, or by over 82% higher In the first half of this year, we have two-digit growth rates of manufacturing industry exports. We also have a very nice text box regarding devoted to the analysis of the factors contributing to the financial results of the domestic corporate sector. From 2014 to 2017, all sectors of the economy posted a positive financial result, which means that the economic recovery is not concentrated in some segments, but that it is broad-based. Thank you for your attention. We stand ready to answer any of your questions.
I would like to know about the likeliness that the growth projection would be revised by the end of the year. That is, what are the risks to the new growth projection? We are known by being conservative. As long as we're not absolutely certain for a projection, we do not come out with data in public. For this projection of 4%, we are really certain that it will be realized. That's why we have come forth with this data. But even for this projection, there are risks, upward risks, but I wouldn't talk about them at the moment because every projection that emphasizes upward risks stirs risks to its realization in future. And then you don't know what will happen with weather conditions or international events in international environments, and we will suffer data in future, suffer consequences in future, and then we will have to justify ourselves and our projections. So there are risks, I agree, but I wouldn't like to go into any further detail at this moment. Sanja Ljubisavljević, RTS, you said a few days ago that household savings in dinars has tripled. What is the structure of these savings? Are these large amounts or lower amounts? So what is the structure of dinar savings? Why do citizens choose to save in dinars? Because interest rates are falling. I would let Nikola answer this because his sector has done a study in the past. The MPS doesn't give advice, but provides reliable information about as to where to invest, where to borrow, and under which conditions. So I would let Nikola present the results of these research.
Thank you, Madam Governor. The National Bank of Serbia, as you have already said, 2 days ago published an analysis of profitability of dinar savings versus FX savings and showed that the dinar savings is more profitable both on the short and long term. Compared to August 2012, when it was at 18.7 billion dinars, now it's 54 billion dinars. What the governor says, there are several smaller amounts, but all this shows that the large number of savers want to save in dinars. What are the key reasons? First of all, a better macroeconomic situation, macroeconomic environment, low and stable inflation in the last 5 years, relatively stable exchange rate, relatively higher interest rates on dinar savings as opposed to FX savings. But what's also most important is the more favorable tax treatment of dinar versus FX savings, given that dinar savings is non-taxable, whereas there is a 15% tax rate on interest gains of FX savings. All these effects, primarily better macroeconomic stability in the country, speak in favor of greater profitability of dinar savings if we look at the period in the last tax years. The saver who deposited an average of 1,000 dinars in August 2012 and then revolved it each year would earn around the 272 euros, which means around 30,000 dinars. He would earn more than 30,000 dinars more than the saver who posted a euro the equivalent deposit in 2012. Our analysis is published on our website, and you can see that even in shorter periods, dinar saving was more profitable in all sub-periods which we monitored. The dominant deposits are smaller deposits and on-site deposits and up to 1-year deposits, as opposed to FX deposits, where around 60% are on-site deposit. Here we have 60% of dinar savings are termed for up to 1 year. So we can speak about this medium-term for divans, medium-term deposits for dinar saving. I would like to add something which I know would interest you. A few months ago, there was a data published in Montenegro where they said that one saver has the deposit of over 240 million euros. And this was a public data. As opposed to the public in Montenegro and public in Serbia, the National Bank of Serbia does not want to fuel this kind of public interest, which is in the domain of, so to say, envy or, how should I say, sensationalism. What we want to create is stable macroeconomic conditions where every citizen is aware of the significance of the saving and do not want to spend their future in advance by losing money through inflation. And this is our different, sound approach to all processes that we manage, including the savings. All the data which we published in relation to dinar savings are public data, such as the number of deposits, amounts, etc., can be found in our website, and you can even perform a sociological analysis on this data. But what we are primarily concerned with is the stimulation of dinar saving and the ongoing process of dinarization, which will make our monetary policy more effective, because this type of sovereignty where you have your currency and your dinar needs to be used in the best possible manner.
From B92, in your first speech, you mentioned the introduction of the instant payment system. Can you please tell us something more about that? What does this imply? How is this easier and beneficial to citizens? And because in the past few days, banks have been informing clients about change of business terms. What does this mean specifically, since these information are quite extensive and citizens may not find them clear? Thank you. For the introduction of the instant payment system, we have tasked our payment operations department. Our colleague Dragana Stanic has been on television for the past few weeks speaking about that. We also have interns for the summer internship working on this, and this is actually the most modern sector, showing that we are an institution keeping up step with the times and maybe even ahead of times. This will mean that 24 hours, 7 days a week, 365 days of the year, money won't be between 2 points, between the one who sent it and the one who's supposed to receive it. But within a few seconds, it will be received by the one who is supposed to receive the funds. So the old saying that money is in the payment channels won't actually be correct anymore. There won't be problems with banks that maybe you haven't provided sufficient copies of payment orders or something like that. This is the most state-of-the-art system using best models for protection and safest practices. Banks are involved in this. Someone is progressing faster, someone a bit slower. We don't accept any excuses insist, because this is a project we have been working on for quite a long time. There are technical details that we are working on, such as some issues with the tax administration, because if you want your salary to be in your account instantly, not to wait, for instance, until Monday, but to receive it on Monday evening, there are some things we need to solve with this regard, and we will resolve them before the instant payment system kicks in. This has to function constantly, continuously, and we would like to inform, and we inform all payment users in the same way in which we inform all stakeholders in the payment system, so that no one would have any excuses not to implement this the way we have imagined it. Naturally, there are challenges. There are information that we receive from banks, which, for instance, what's particularly interesting for me, banks inform citizens about the introduction of DINA, of the DINA card. But believe it or not, the spectrum of notifications that banks send range from, for instance, some banks say that we are pleased to inform you that as of August the 17th, you will receive DINA, which will enable you free of charge access to your own payment account. For instance, notifications by banks which formulate their notifications by saying, we apologize, we hope you won't have any unpleasant experiences because the National Bank of Serbia has decided to introduce DINA. So this just shows you how, speaks about the awareness of banks and how tightly they are bound with the interest of their clients, and how well-meaning they are in their intention to implement the decisions that the regulator, the National Bank of Serbia, passes in order to do something that is in the interest of all citizens, because all the time this is what we have been doing, to have complicated processes end up in good results for citizens. So extensive letters that we receive are an interesting occurrence at the moment when many banks are waiting for the law which will oblige them to provide transparent names and costs of all services, so that citizens could opt for what is best for them and what is the cheapest. So we are faced with a question of we wonder if there's any cartel-like behavior in the banking sector, not with all banks, maybe with just a few. But one of my very good and qualified associates said that it's time perhaps that we examined what those who are tasked as supervisors, what do they do to check whether banks are informing their clients as they should, or maybe are implementing some cartel-like behavior. So there will be more things for the National Bank of Serbia to do, more work to do.
And yeah, then could you please shed some light? How can the National Bank of Serbia do this? Let us leave some time for a more detailed analysis of the inflation report. As you know, we are used to doing the job and then presenting the results to you. We don't want to exhaust ourselves by telling what we are going to do. This is not what I'm used to, nor what the National Bank of Serbia has used you to. When it comes to inflation projection, you said that in the next 2 years you expect inflation to remain low. And what are your projections for fuel prices? Do you expect that these prices will pose a risk as they were in the past year? Mirko, the floor is yours. The projection of fuel prices is based on the assumption that oil prices will stabilize at the current level, or that as market players expect, that they will gradually decline. And in this sense, our projection is that fuel prices will stabilize at the current level. Growth from the past period will not continue because this past growth resulted from the growth in global oil prices. From July last year to July this year, global oil prices rose by 45% expressed in dinars. At the same time, local fuel prices increased by 9 to 10%. If the assumption that global oil prices will stabilize at this level, then this will halt the local fuel price growth. A fall might occur if global oil prices fall. That is, if market players are correct that in the coming period we will see a mild fall in global oil prices, then this might lead to a moderate decline in fuel prices by the end of the year. Miloš Obradović Danas. I have a question regarding the effects of the crisis of the Turkish lira might have on the entire region, Serbia included. It might lead to a flight of capital. Do you have any comments on that? I would like to tell you that Serbia has to a significant degree built its own picture in the international community, and even when a part of the region is in crisis, our country is not perceived as part of the region, and I hope that it will remain so. The National Bank of Serbia is keeping a close eye on all developments in the region. We are monitoring this crisis, and uncertainties in the international environment persist regardless of this crisis. And we have witnessed this over the past several years. Over the past 6 years, we have maintained relative stability of the exchange rate despite Brexit, despite diverging monetary policies of leading central banks, despite capital flight from developing countries. We have seen all that, and not at a single point has stability in the domestic market been jeopardized. So there are no fears that the effects of the Turkish lira crisis will spill over to the domestic market. This crisis has eased. Global risk aversion present at that time during the crisis has also appeased, and we can see that the dinar is still under appreciation pressures. And these pressures are of structural character, and there are several factors working in that direction from April last year. And they may be summed up in better macroeconomic fundamentals and growth prospects from the aspect of foreign investors, regardless of whether they are direct foreign investors or portfolio investors. So let us sum up. There is no fear when it comes to the crisis of the Turkish lira. We don't expect it to spill over to our country, but the National Bank of Serbia will continue to closely monitor all developments internationally. We have increased the resilience of the domestic financial system to potential shocks by increasing our foreign exchange reserves. Since April last year, they increased by 2 billion euros on account of our interventions in the foreign exchange market, and from August 2012 by 1.1 billion euros. This means that we have a buffer against any potential shocks from the international environment should they occur.
You said that this crisis won't affect Serbia, but I would like to know, in regard to appreciation pressures, how do you explain these pressures? Because in the report you said that the average trade volume in the stock market is 28 million, and you said that you bought 20 million euros. What creates this pressure in such small outflows? And second thing, what will be the challenges in your second term in office, given that previously you exhausted the effects of huge cheap liquidity available throughout the world. Now we are moving towards a period where interests will go up, and this is a potential risk to all that you have been talking about in Serbia. So what will happen with the vice governors? Will there be a new one? Thank you. I would like to begin with these last questions that you mentioned. In September, I will be in the parliament with a proposal for the appointment of new vice governors, so we'll cross that bridge when we come to it. As for the challenges ahead, the National Bank of Serbia has done a good deal behind the curtain, in the shade, so as to speak, and keeping quiet, because this is the nature of our work. Our role is such, and I have perceived it that way. So every time I talk about the work of the National Bank of Serbia, I do it from that perspective. I believed, and I still do, that it's best for us to come forth with results, and every appearance is strictly controlled. Financial stability report, inflation reports, and other rare occasions, such as a cooperation with the EU, new IPA projects, events, deals with the financial international institutions, and similar. Whether the results we have achieved are evident, and to what degree is the result of the effects of cheaper liquidity. I cannot agree with that. I would like to repeat that Serbia has changed the image, its own image in the world, and has become an attractive investment target for both portfolio and foreign direct investment. We are pleased to see the high reinvested profit, the high profit in economy that is reinvested as investments, and the fact that we have changed the structure of foreign investors because we still need them to finance inherited deficits. Although we moderate consumption expenditures with what we earn as a government, there's still need for those investors in our portfolio investments. I do not deny anyone's reasons to see our successes as not so, as smaller than they are, and to interpret them differently, but all questions are best explained by the results we have achieved, presented in graphs and tables and our reports. In all financial circles, we have shown that we have our path, which by no means goes contrary to expectations, because we do not look to others. We listen to them, we hear and see what's going on elsewhere in other central banks, but we pursue our own policy because this is what Serbia needs. It will be like this in the future, and I would like to say that the National Bank of Serbia in the past 6 years has greatly altered its own image as well. The two passages I particularly stressed, lower financing costs, which are affected through exchange rate losses and interest rates, implied lower profits for some stakeholders, definitely. But those are smaller groups, although spread through in all areas. But the entire economy as a whole earns a profit because there aren't any interest rate changes as they used to be. So this stability is relative and not the one that was created at the end of the year or half year for someone's large or individual transactions. So this is what creates confidence in the National Bank of Serbia, but also creates resilience in some individual groups that have become used to using institutions to their own purposes and to their own benefit. I pay no attention to that because I'm in the years where this is the crown of my career, and it can be seen by everything that I have done and written and said. And this is an opportunity for me to show this specifically through the work that I do. Appreciation pressures are high, and just before the meeting this morning, we bought 30 million euros. I'm sure that we will continue with interventions because these pressures are still considerable, and the 1,475 million are an important buffer. So this shows that this issue will remain here for a while, this nice problem of having a surplus. So by the end of this month, definitely, Nicola will explain the details. But the manner in which the turnover in the market is calculated and the volume in the foreign exchange market perhaps creates an illusion with those who analyze the turnover, and they state that the turnover is low and the National Bank of Serbia maybe is sometimes more present than can be seen by the turnover itself. There are perhaps those who do not understand, wouldn't understand the fact that when I came here, I inherited decisions and regulations that worked more in favor of those who control the market in line with the decisions brought by the National Bank of Serbia, rather than using those decisions to maintain the stability of the financial market or stimulate turnover in the interbank foreign exchange market. The scope of our achievements in this remit regarding the time for processing transactions and the fact that the MBS is no longer a tool that somebody is using to its own benefit, but Nicola will tell you some more about that. You can see that he's now sitting to my right. And I'm particularly proud of the stability, relative stability of the exchange rate when we didn't have any particular value as a target, despite what everyone else was saying, and we enabled everyone to plan their own personal and economic life and venture. So I will let him explain this volume.
Thank you, Governor. When it comes to the volume of trading in the foreign exchange market, and in August 2 years ago, a similar question was asked, and we published on our website a specific analysis which showed that the gross volume of foreign exchange market trading was not decreased until a net volume was decreased as well. Speculative activities performed in the domestic foreign exchange market in the past period actually blew up artificially the volume of trading in the domestic FX market, and they did not reflect the actual needs of bank clients for foreign exchange. We can see this also in the behavior of our key enterprises that are most active in this market segment. In the first 7 months of the year, relative to the same period last year, we have a net supply of foreign exchange, which is by 315 million euros higher, which means that by 25% the demand for foreign exchange is lower. But the volume of trading, the volume of purchase of foreign exchange and the volume of sale of foreign exchange by domestic enterprises did not decrease. Both categories increased, but they are now much better balanced. Supply is now higher than demand. How is this reflected in macroeconomic data? We're talking now about better balancing of the current account deficit, which is more than fully covered by net foreign direct investment. And this is what is reflected in the category of net demand of residents in the domestic foreign exchange market. The second factor that contributed to appreciation pressures that are of structural nature, like the governor said, and present since April last year, is increased interest of foreign portfolio and direct investors in our securities. And the effect of this in the first 7 months of this year relative to the same period last year is around 700 million euros, which means that non-residents completely completely shifted the direction of their action. Over the previous years, they were the buyers of foreign exchange, and this year they are net sellers of foreign exchange. Another important factor contributing to appreciation pressures is the inflow from tourism, which is by almost 10%. That is 8% higher in July this year relative to the same period last year. It shows that the number of foreign tourists in our country is higher, as well as the number of those transiting the country. Taking into account all of these factors, additionally stronger purchase of foreign exchange in the domestic market all of this can be summed up in improved macroeconomic fundamentals, and improved fundamentals are actually lie at the core of appreciation pressures. I will repeat that when it comes to interbank foreign exchange market, we are present there, but we do not. We intervene impartially. We only want to steer the market lightly. We intervene also when the trading volumes are low in order to bolster those trading volumes. I don't know whether you have data about morning trade and afternoon trade, because sometimes we intervene in the morning in order to bolster banks to trade among themselves in the afternoon. I would just like to add, because I know that you keep abreast of all developments in the world, I have to say that I have been personally brave to allow the MBS to participate in the interbank foreign exchange market, because I didn't want inflation to be my overarching objective. I didn't want us to hit the inflation target and miss all other targets and objectives, and thus cause many disruptions in other processes and segments. We have used the right to intervene in the interbank foreign exchange market, and this instrument is something that is used by countries that have not resorted to this instrument earlier, and it is used even by those countries who do not have such highly euroized economies, and even they now recognize the legitimacy and the usefulness of this instrument. So let us conclude. Theory is when you do everything perfectly, but nothing is functioning. You know everything, but nothing is functioning. What is practice? When everything is functioning well and you don't know why. We are somewhere in between these two extreme situations, and we know very well why we do achieve results, because we know theory, but we do not stick to it blindly. We do everything by calibrating it to our specifics, so as to work to the benefit of our country and our citizens. If you compare 2012 and 2018 and you show these results, the first challenge you meet is how to sustain these results. And many challenges are ahead of us. I don't like to discuss these challenges in the public. Our main challenges are inflation, financial stability, introduction of new international standards, implementation of Basel III standards, accession to the EU, harmonization with all their standards. These are our regular activities, and everything else that arises as a structural question, as a question of indexed assets, excessive use of the currency clause, which at one point is necessary, but then again is maybe overused. These are all things that can be put under all these key objectives I have mentioned, that we think do not need to be changed. We have only lowered the inflation target to 3%. One of my friends told me that he wishes that Serbia's credit rating be upgraded, but I think the National Bank of Serbia can do a lot, but it cannot do a lot on its own. Everything Serbia has achieved and needs to achieve requires cooperation between all stakeholders, all levels of the government, and this is the biggest challenge for the National Bank of Serbia. I want political stability that we have had to become a constant. And I want us all to work to the benefit of that stability.
Any more questions? I thank you all for being here, particularly all of our associates from National Bank of Serbia. Thank you.